Hello traders, here Chris Capri, secondsguysforex.com. So I've recently shown over the last few content pieces how the idea of confirmation in price action is an illusion, and it's not what professional traders are looking to enter the market. I've also shown how entering on a 50% retrace tweak entry on a pin bar is a suboptimal or retail entry. I think it can be easily said that when retail traders are getting in the market, professional traders are already in profit. This video further demonstrates this about the pin bar entries, such as the 50% retrace entry or the sell on break being also a retail or suboptimal entry. Now, I'm going to use an example here from a live trade I'm in right now. And this is one that I discussed in my members trade setups commentary in the price action course. So I sold right at this resistance level. I felt like we are still in a range type structure, and that if the market protruded up to this resistance area right over here, that sellers or offers would enter the market and push the pair back down. And that is exactly what happened. So I got in at 48.75, and literally it was about 6 pips off the intraday high. And so I put a stop just above these little wicks right over here, particularly this one here, which left me with a 30 pip stop. Now I'd like to compare this entry versus the 50% retrace entry or sell on break so that you can see the differences. Now going to another chart here. First off, using the 50% pullback entry here, you would have missed this trade completely. So according to the faux authorities of price action, particularly Niall Fuller, the next entry would be to sell on a break of the lows here. In fact, pretty much every other person who teaches the cut and paste or carbon copy version of price action that you see out there, especially around the pin bar, would all say you either sell on a retrace or you sell on a break of the lows. Now, this gives you a much worse entry and about as late or a retail as entry as you can possibly get. So that puts you in at about 49.33 roughly. Now, assuming in most cases we are going to have the same stop just above this here, most of the time we're going to have the same stop on the same type of entry. You are going to need a 70 pip stop compared to my 30 pip stop, which is at 15003. So you need 70 pips, I have 30. Now, just from a risk to reward perspective, when you are hitting plus 70 pips or plus 1R, which would put you at 48.63, that's right about, it's actually below the intraday lows, so right there. So this right here is your intraday, or that would be your plus 70 pips and your plus 1R. When you are hitting your first plus 1R, my entry at 49.75 is up already 112 pips, so a plus 4R. So now the moment you're getting your first R, I'm already up 4 times that. In fact, by the time you're entering the market right here at 49.33, which is a pretty razor sharp entry if you're selling on break, I'm already up plus 40 pips from my 49.75 entry, or in this case, plus 1.33R. Again, coming back to the perspective that it is more often a professional trader is already in profit when a retail trader is entering the market, you can see the differences quite clear here between the two entries. But let's play a little fantasy here. Let's say that the market pulled back magically to your 50% level perfectly. Let's say you got the absolute highest uptick on the pullback, the best possible entry in the pullback. It just happened to go there. And that would be 49.58. Now, again, assuming most of the time we will have the same stop loss placement, your stop loss is 47 pips if you put it at 15003, whereas mine's still 30. So when you are hitting your first plus 1R at 49.10, which is right about here, actually right there. So when you are hitting your first plus 1R at 49.10, I'm already up 65 pips or plus 2.16R. So with that being said, it should be very clear, especially with all the other content I posted before this, it should be very, very clear the differences between a professional trader's entry and a retail entry, especially being offered by the authorities or the faux authorities on price action. If you want to continue to have suboptimal retail entries, then you can use the 50% retrace entry. But if you want an entry location that gives you better accuracy and a higher plus R per trade, many times double the plus R available, then you'll want to adjust your entry method. And this is what I teach in my price action course, particularly how to get plus high R trades like this. Now, if you found this video lesson useful, please make sure to like, share, and tweet it below. And I would love to hear from you what aha moments you have from this video. So please come over to see this video on my website as well at secondskiesforex.com, where all the discussion is happening, and leave your comments there. But thank you for watching this video. Again, my name is Chris Capri at secondskiesforex.com, where I teach you how to increase the way you trade, think, and perform.